Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, it was a wild whipsaw night right across the board, not only in the FX markets but in the equity markets as well, with the surface of fresh news that problems at a Zurich-based Credit Suisse group revived fears of banking crisis after the recently SVB fallover. Besides that, a drop in retail sales and easing prices in February offered preliminary signs of cooling economy. US retail sales and wholesale prices slipped in February, according to the government's data released on Wednesday, after a surge in US retail sales the prior month, suggesting consumer spending is getting challenged by high inflation. The value overall retail's purchases decreased by negative 0.4% after a revised plus 3.2% advance in January. Excluding gasoline and auto, retail sales were relatively flat. The producer price index, which generally reflects supply conditions across the economy, fell by negative 0.1% in February from the prior month, compared with a downward revised plus 0.3% increase. From the turmoil of the market news, the dollar index, which measures the greenback strength against a basket of six major currencies, surged from the key level of 103 after printing a 103.02 low and to a high of 104.68 and eased back to 104.36. This saw the Australian dollar retreat from the key level around 67.35 and now questions whether we've seen a top due to the engulfing candle, and if so, if we get a close under the level, which is somewhere around the region of 65.90, then this would ignite further downward decline and give the call back to 65 cents. So all eyes on 65.90. If we don't get the break, then we could see a slow grind all the way back up to that top side 67 region. Not so much surprise, we've got the range in one day. That is, after challenging the top side, rejects 107.60-65 in the euro and plummeted all the way back down to the key level of 105 figure 15. And now questions where to go next. If the dollar index can sustain its gains over the next 24 hours, then I feel that euro will pressure the downside even further and therefore could see the 105 taken out and looking down towards 103, as the dollar still has, in terms of how it sits on a broader picture, the primary is still bullish, and therefore rejecting that key level of 103 could put further demand in the US dollar and weigh on many of the currencies. So all eyes on the base around 105 after that engulfing candle, supporting further weakness into today's price action. Now dollar yen even played the same role as the euro after rejecting the top side of 134.6070, reaches its downside target of 132.2040 and now holds. In light of the pattern, we are still a little bit weak, but I still feel there is possible demand from that bottom side of 132.2040 and therefore could see a bounce and re-challenge that top side. I haven't dismissed my bullish call, that is towards 138, so I feel that the dips are likely the way to go in terms of opportunity as we keep seeing rejections from that lower side of 132. The pound also found a lot of difficulty after its recent strong gains and plummeted from 121 highs to the lows of 120. In terms of the pattern, the market is a little bit mixed here, but nevertheless, a break, if we see, of 120.20, that would give further scope to the downside, maybe back to 119.65. Moving on to gold, well, the market was a little bit whipsawed as well after reaching the lows around 1,885, surged all the way back to 1,930 on the back of the Credit Suisse crisis. Now, looking at the pattern, the market is still finding safe haven demand, but I feel that, like previously, up around this 1,900 and above, the market was very whipsawed, and you can see here there was hardly any gains to support a bullish call. So therefore, while in or above the 1,900 territory, could see another down challenge and eventually see a pullback to, I believe, 1,865.70. Finishing up with oil, well, the market was very, very whipsawed, as you can see, and reaches its target of $68 a barrel, and now leaves me somewhat neutral in the short term due to the fact that we are extremely oversold But even though the ADX is supporting the bear case, still could find renewed bounces and big, likely, you can see here, range or candles that could actually make trading slightly difficult. So I'd rather sit out just for the moment and see how we play due to reaching its last objective. That was from 72 down to 68, and now it leaves me neutral. Well, that's a wrap for the morning. Thank you very much for joining me, and as always, look out for the interest rate report, and I hope you enjoy the great start to the day.